Your life journey doesn't stand still, and neither should your wealth. Welcome to Wealth on the Move, the podcast. Most families leave thousands of dollars on the table simply because they don't understand how FAFSA works when it comes to applying for financial aid and starting to pay for college. Hi, I'm Will Hoffman, founder and president of Hoffman Wealth Management, and welcome back to another episode of Wealth on the Move, the podcast. Today, we're going to talk with Tina Steele, the FAFSA Guru. Now, if you've been following us since we were the Monetary Mixtape, you know Tina. She joined us on an episode to talk to Gen X parents about the FAFSA form. And we learned a lot there. And we know that the FAFSA form is an ever-changing amoeba that really has an impact on financial aid. And in this time when kids are going back to school, parents are thinking about how are we going to pay for college, that FAFSA is going to be due before they even maybe make a decision on the school that they're going to. We want to get this insight to you, and we want to talk with the authority when it comes to FAFSA and how to apply and how to position yourself and your assets and your wealth so that you are eligible for the most that you can be from the financial aid process. So Tina Steele, welcome back to Wealth on the Move, the podcast.
Well, I'm happy to be back.
I'm excited to have this conversation. Our last conversation with Dave Peterson, the scholarship coach. I have a freshman in high school now, so all of this is on my radar to make sure that we are maximizing his opportunities and learning for the other two boys when it's time. So I'm extra intrigued when it comes to the FAFSA process. Granted, I have a few years to go, so I'm sure there will be changes. But thank you for joining us and talking with our listeners about the FAFSA.
Yeah, I'm excited to be here. Definitely a hot topic for sure.
Yes. So let's start. Tell us what is FAFSA? What is the process? What is the form? What does all of this mean?
So the FAFSA is known as the Free Application for Federal Student Aid. This is put out by the federal government, and every single student that plans on attending college, whether dependent, independent, graduate student, should fill out a FAFSA to apply for federal and state financial aid, and in some cases, institutional aid in the form of scholarship money.
Okay.
So it opens every year, October 1st, with the exception of the last couple of years. There was a lot of craziness going on with FAFSA simplification, and students have to fill it out every single year to get that money each year in college.
Okay. So even going into their last semester, if it's lapping over another school year, the FAFSA is a necessity.
Yeah, so right now, any student that plans on attending college in the fall of 26 or the spring of 27 will fill out the 26-27 FAFSA that actually opens up October 1st.
Okay.
So especially high school seniors this year, they'll be completing the FAFSA in October, and then, of course, any other student that's returning to college.
Okay, so it starts October 1st. When is the deadline?
So technically, the FAFSA deadline extends throughout the entire 26-27 year. However, there are priority deadlines that colleges have and state deadlines, that families and students don't want to miss. So I recommend filling out the FAFSA in October when it opens.
Okay, great to know. So, and give us a little bit about your background. Why are you so interested in the FAFSA? What caused you to focus on this? It's a very niched part of the college search, college admission, scholarship, financial aid process. What drove you to focus strictly on this process?
Well, it started back myself when I was in high school. I was a first generation college student, and I came from a family where my parents weren't really educated about the college and financial aid process, didn't know a lot about it. So it wasn't really something that was talked about growing up. And I didn't go right off to college like my friends did because my family didn't think that we could afford it. Shortly after that, a couple of years later, I landed my first full-time job working in a financial aid office, and I started learning about it. And that's when I went back to school myself as a non-traditional student, completed my bachelor's degree and then my master's degree. And I really just kind of stayed in the field working in different college financial aid offices and facilitating college planning and financial aid workshops for the state of Maine for 10 years. And in the years that I did that, since 1990, I saw a really big gap between, the available help out there for families that had financial aid questions and what was available. College financial aid offices are stretched to the max. They only have so much time. There's an 800 number that is super frustrating to get through to. So I kind of always had this vision of starting this niche business. There's a lot of educational consultants out there that focus on admissions, but not as many on financial aid. So I launched this, I think it was about 2016. I'm almost
Okay.
in my 10th year of business. And
Awesome.
yeah, it's been great.
And growing, we just talked about how, growing substantially on TikTok, if
Yeah,
I understand you correctly.
great place to follow me for free information.
There you go. And given the college landscape and how expensive school is, and our profession is familiar with all the statistics. College inflation always outpaces regular inflation, almost doubles what regular inflation is. And the short time horizon that parents or students have to try to save to meet that goal. Things like the FAFSA form are exceptionally important when it
Hmm.
comes to trying to get the most that you're eligible for. For families that are new to this process, we know the deadline and we know when it opens, but can you walk us through what they're doing when they fill this form out, and what it is, what they're triggering or process that they're starting?
Sure. So there's two different sections to the FAFSA now. It used to kind of be one form that both the student and parent did, but there's a student section. The student will fill out his or her portion and then invite the parent as a contributor to the FAFSA. So the 26-27 FAFSA will be based on 2024 income information.
Okay.
And then you have to report the value, any child support received, the value of any real estate owned other than the primary home you live in, because there's a couple of protected assets you don't have to report on the FAFSA, which are retirement accounts and the
Okay.
value of your primary home. But any other investments you have, stocks, bonds, CDs, money market funds, trusts, 529 plans, cryptocurrency, and things like that, are factored into the equation when it comes to financial aid.
Okay. So anything that's not a retirement account as deemed by the IRS. So even if you're saving for money and you say it's a retirement account,
Right.
it's up to the IRS to
You're
determine that.
right. A lot of parents have investment portfolios that are earmarked for retirement, but
Right.
if they're not in an actual retirement account, they have to be reported.
Okay. And that all of that is looking 2 years back. Is it always looking 2 years back?
It's always the prior year.
Okay. What's one of the biggest misconceptions that folks have about the FAFSA process?
That they make too much money to qualify. That's probably the
Okay.
biggest one. Families assume that, they're not going to get any financial aid, when it comes to that. And then that it's really complicated. It's a complicated process, which it's not. They've really simplified it a lot.
Okay.
So I think those are probably the two biggest misconceptions that I see.
Okay. And there's been a lot of changes lately
Yeah.
on the FAFSA. I'm sure that there's somebody that applied for going into their freshman year and heading into their junior or senior years is noticing some big changes. What are those changes, and how should folks be navigating them?
But there's been some big changes, such as child support received used to be counted as income, which inflated that student aid index, which used to be called the EFC, the expected family contribution. It would drive that up more, and the higher that number, the less financial aid. They actually changed that to be factored in as an asset, which has helped significantly for any families receiving child support. Another big change the last couple of years was not a great one. They used to not look at business value for businesses with less than 100 employees, but then families had to start reporting business value.
Right.
However, that is changing again for the 26-27 year, and they're going back to what it used to be, which is awesome. So if you have a business with less than 100 employees and it's family owned, you'll no longer have to report that going forward. So that's really great. And then lastly, one of the changes that really has not been good is families with multiple children in college at the same time no
Okay.
longer get the benefit that they did. So it used to be when families had more than one child in college, the government does this calculation and comes up with the student aid index number.
Okay.
This number is what college financial aid offices use to determine financial aid. That student aid index number would be divided equally among the number of children in college, which would mean more financial aid. It's no longer being divided equally, and every child has the same student aid index number, which has
Okay.
really hurt families with more than one child in college.
What was the catalyst for that?
I'm not sure, to be honest. That there's just, I think, just really tightening up the parameters on how much
Okay.
financial aid is being awarded, because there's a lot of families that have more than one child in college. I'm really hoping that it eventually shifts back like this business
So my, I got three
did.
kids.
It's awful. So that's, some colleges, especially the private, more expensive colleges, are recognizing that and offering kickbacks for families who have more than one child in college. But
Okay.
public colleges kind of have their hands tied and they aren't able to do that as much. So that's been
Gotcha.
unfortunate.
What point in time in a kid's, education process should parents start or families start thinking about a FAFSA strategy?
Oh gosh.
I'm gonna make an assumption that it's at least 2 years ahead of application because they're looking back at that data already.
Yeah, I mean, you really minimum a couple of years, freshman year in high school, if you like, ideally when the student is a child,
Right.
they really should start looking at investment strategies, education plans, because the cost of college is astronomical
Sure.
now. But there's so many families that didn't prepare early, and that's okay. So in high school, at least, freshman year, at the very minimum, by junior of high school year, at least start understanding what's happening and how it works and how to find colleges that are affordable. But
Okay.
you need a few years of some good investment strategy if you plan on using that out of pocket money,
Sure.
to pay for
Well,
college.
and understanding it's up to our profession to understand how to structure assets, how to
Yeah.
structure how they're held, where they're held, who holds what. Can you help us understand that a little bit? Whether it's a child's asset or child's income, a kid has a summer job or an after school job, is that hurting their potential for financial aid?
So students' income and assets are taken into consideration. Job wise, if they're making if it's a summer job and they're making $5,000 or $6,000, $8,000, it's not a big impact.
Okay.
But asset wise, it is a huge impact. So any investments I would keep in the parent's name, because student investments, students' money in their bank accounts, checking, savings, cash on hand gets hit at 20%. Basically, what happens is that student aid index number gets inflated by 20% of the total value of those investments, which the higher the student aid index, the less the financial aid.
Sure.
Whereas if it's a parent investment or asset, money in the bank, it gets hit at 5.64%. So you can see it's a pretty significant difference.
Well, sure. And, I know we're not always thinking on this level, but we have to be talking to grandparents also, especially when it comes to how they're listing things in their estate, how they're listing beneficiaries or heirs. Because,
Right.
while I don't think anybody's going to be disappointed with a windfall, it could really disrupt, especially if they're receiving it at the wrong time or if the wrong person is named, that could
hmm
really disrupt what's available from a financial aid
It
process.
can. It really can have a big impact on that. So you really want to kind of plan that strategy as you get closer to those college years.
Okay. That's some good things to know. So there's something that emerged in my research for this called the base year. What is the base year, and explain how the timing of this is going to impact those calculations.
So the base year really is just that year that's taken into consideration
Okay,
when filling out the form,
so
the
so
FAFSA
that
form,
base year moves every year. It
every
doesn't
year.
stay at the same time, and you're
Exactly.
okay.
Yeah, so the 26-27 FAFSA is based on 24 income. The 27-28 FAFSA will
Gotcha.
be
Okay,
25 income and so on.
okay, I understand now.
So those financial aid offers can change from year to year
Okay,
pretty significantly because of that.
okay. And you said 529s factor into the equation. Do they count as a parent asset or a child asset? How does
They
that work?
they count as a parent asset. This is one
Okay,
of the biggest mistakes I see parents make. They actually report it as a student asset, and remember that can hurt
sure.
financial aid. So it's a parent asset, and then parents only have to report the value of the 529 plan for the student whose FAFSA they're completing, not 529 plans for all their children.
And that's based on who the beneficiary of that 529 plan was, um, in that base year.
Right, or who is right currently who's
Okay.
currently the beneficiary when
Because
they're filling out the
beneficiaries
FAFSA.
on a 529 plan can change.
So it would be as of the day they're completing the FAFSA.
Okay.
So whoever that beneficiary is the where it needs to be reported.
Okay. And is
Yeah.
that a suggestion you make to families is to, especially with multiple children, to change that
I mean,
beneficiary?
yeah, I mean, I'm not as well versed with the 529 rules as you would be, or,
Okay.
or somebody. But yeah, if possible, ideally, that's especially if there's a big chunk of money in there, that, changing the beneficiary could impact, take that out of the equation for the
Gotcha.
student. Yeah.
Okay. So we had Dave Peterson, the scholarship GPS and scholarship coach, on the last episode talking about scholarships that are available, and how to track applying to these and ultimately win these awards. How do these impact the FAFSA application, especially because you may be filling out this form prior to knowing, you fill this form out in October and don't win a scholarship until May of the following year. What impact does that ultimately have on financial aid or the FAFSA process?
Yeah, so it won't impact the FAFSA, but it could impact the financial aid offer. So it depends on the college if they have
Okay.
scholarship displacement or if the college meets 100% of financial needs. So there's some, when it comes to determining a student's financial need, it depends if there's any wiggle room in there. So what I mean by that, if a student is going to, let's say, a college that meets 100% of financial need, which tends to be those really private, more expensive colleges,
Okay.
anybody can determine how much financial need a college meets by just Googling it. How much
Okay.
financial need does a college meet? So in that scenario, when a college meets 100% of financial need, let's say the college is $80,000, and they subtract the student aid index, let's say for the family it was $40,000. In that scenario, the student's financial need would be $40,000. The college that meets 100% of financial need is going to come back and give them $40,000 in need-based aid. So any
Okay.
outside scholarships that student receives will start displacing, taking away the free money and replacing it with the scholarship monies. If it's a college, there's so much wiggle room in colleges because so many colleges meet anywhere between 10 and 100% of financial need. So if they're not
Okay.
meeting full need, there's wiggle room in there for students to receive scholarships. So
Okay.
I usually tell students it's really those colleges that meet 100% of financial need where they might see scholarship displacement, or if the college has a clear policy on scholarship displacement, which some do, which they
Okay.
say, if you receive outside scholarships, we're going to take away scholarships that we give you.
Okay. And those are questions you ask in the application process, or I guess prior to accepting
Yeah,
the
you
aid
can.
or picking your school.
Yeah, totally. And you can usually find this information out on the college financial aid website. Or like I said, Googling how much financial need colleges meet, having a conversation with somebody in the financial aid office at the college. Those are all things
Okay.
that you can determine.
So I want to talk about income for a second, because you had mentioned parents' income and child's income are part of this calculation. And I think about this mostly from my perspective. My income moves when the market does. How we're waiting 2 years
Hmm.
before for that income to be factored. Is that correct? Is there anything that can be done in those years when, listen, income just got hit by 20% because the market took a downturn, but the financial aid, I'm not going to get credit for that until 2 years from now?
Yeah, so this is another mistake I see a lot of families make. They assume because the FAFSA requires that base year that that's what they have to stick with, even if they've had a loss of income.
Okay.
So, for example, any students that are currently in college this fall and spring, 25 and 26, they had to use 23 income. But let's say the family's income took a dive in 24,
Okay.
and it was a lot less. They can actually report that as a special circumstance directly to the college financial aid office, fill out their form, and then the college financial aid office can use that 24 income in place of the 23 to recalculate financial aid.
I see.
So
But
this
do
is
you do that
important.
directly with the institution, not
Yeah,
on the
not
form?
FAFSA.
Okay.
Right. Yeah. So you do it. And the same goes for 25. If a family is, parents, somebody's unemployed and their 25 income is looking a lot less, once they get further closer, like to the end of this year, they can also report that as a special circumstance,
Okay.
showing that this income is significantly less.
And you guide folks through this process.
Mhm.
So if they're in your program, they get access to all this information, all this data,
Yeah,
and
yeah. I
step by
pretty
step
much,
process.
yeah, take them from A to Z in the financial aid process, make sure all their ducks are in a row and they're doing
Okay.
everything they need to do. I mean, in addition to the lower income, I mean, there's other special circumstances like significant out-of-pocket medical or dental expenses. Or let's say their income that they used on the FAFSA was inflated due to a one-time source of income, such as a retirement distribution, capital gain, or something like that, that's also considered special circumstance. If families are paying elder care or they have significant household repairs that are not cosmetic. I mean, there's a number of things college financial aid offices will take into consideration.
Okay. But again, take that up with the institution itself, not on the FAFSA form.
Yes, correct.
Okay. Can you give us a scenario or some real life examples on how you've taken someone who really assumed I'm not going to get any financial aid? Parents
Yeah.
have great jobs. We've saved. Unfortunately, like I mentioned at the onset, that saving window is so short
Mm-hmm.
that it's a real challenge, especially with schools charging upwards of $80,000 or $90,000 a year now. That's 18 years is a very short window to try to accumulate as much money.
It is. It
Um,
is.
but
And
what are
there
some real life scenarios where you've taken someone that said, obviously hide the names to protect the innocent. But where someone has looked at this and said, there's no way we're going to qualify. And all of a sudden they're getting financial aid awards from the schools that they're attending.
Yeah, there's a lot of families. I mean, the majority of families I work with are anywhere in the like 150 to 300 plus $1,000 a year range. So, I mean, probably one of the biggest success stories was a family that made in the low 200s, twins, a couple of years ago. They had not done financial aid in prior years because they didn't think they'd qualify for anything. And then basically, on top of their regular financial aid offers, both of the twins were going to private colleges.
Okay.
And a result of going through my program and me helping them draft their financial aid appeal letters, each twin received an extra $40,000 a year in financial aid, which is huge. I mean, there's countless stories I could say, families that earn a couple $100,000 a year going through my program that are getting, that extra 20,000 a year, 25,000 a year on top of their regular financial aid offers because they're kind of using the, resources and, writing the financial aid appeal letter and applying for the scholarships. So there's a lot out there, for sure.
Thank you for tuning into this episode of Wealth on the Move, the podcast, brought to you by Hoffman Wealth Management. Here at Hoffman Wealth Management, we focus on working with busy families and active retirees, helping them navigate the complicated scenarios of their wealth while building the life that they desire. And we believe that every financial journey deserves direction. That is exactly what our proprietary process, the HWM navigation formula, provides. Just like a GPS, our navigation formula begins with two key questions. Where are you now? What does your financial picture currently look like? And where do you want to go? What goals and dreams do you have? From there, we help you navigate every financial turn en route to your desired destination with clarity and confidence. It's more than a plan, it's a personalized path forward. If you want to learn more on how the navigation formula can work for you, reach out through the contact options in the show notes below. We would love to help you chart your next move. Now, back to this episode of Wealth on the Move, the podcast. And their decisions aren't necessarily final, correct? There's some negotiation tactics that can be deployed once you get your first answer, right?
Yeah, I'm a big proponent of students appealing every financial aid offer they receive, and a lot of families are not aware they can do that. Statistically, about 80% of the students I help through that process do receive additional financial aid. I've seen it range all the way from a couple $1,000s up to like $40,000 per student. So yeah, it's not one and done. I don't like to use the term negotiation because you have to use some strategies when you do a financial aid appeal, and it's a very humble letter that you write. But yeah, there's a lot of opportunity to get some additional financial aid.
And is that regardless of whether it's a public or private institution?
Yeah, I would say that private institutions have deeper pockets, more endowment money. They tend to be the ones that come back with better offers. Public institutions, that's not to say they won't. I have seen them come back with additional financial aid, but their hands are a little bit more tied with how much money they have to offer. So if they do come back and offer any, it could be a little bit more limited as compared to a private college.
Okay. We talked about it with Christy Dosh, the NIL expert, and not every athlete is going to get a full athletic scholarship that's going to take care of all of the bills. So I would argue most athletes are going to get partial scholarships and then turn to financial aid or now NIL income to help offset the price of college. We just talked about the scholarship component. What happens with NIL income when it comes to the financial aid process? And is that hurting kids when it comes to getting financial aid awards or the most that they can?
It can because, student and parent income is factored
Right.
into the equation. Normally, students in high school, aren't coming out with significant amounts of income, but that NIL income can be a lot different. So it just depends. Like if a student has a parent that earns a couple $100,000 or more a year and then they make a decent NIL income, it might be a moot point. But if that student has parents that make less money, that might help them get more financial aid, and then they have that NIL income, it can kind of throw them out of the, equation for some of that free money that might be out there. So it really does make a difference in, how much financial aid students qualify for.
And, I guess the unfortunate thing is the institutions are going to be well aware before the FAFSA is about what these kids are earning from an NIL contract.
Right, right. I mean, that is taxable, provided it's taxable
Right.
money and they're filing taxes. Yeah, it'll be automatically imported to the FAFSA.
Okay. When we talk about common mistakes, and you've listed a few, what are some other very costly errors or mistakes you see families make other than not applying because they don't think they'll qualify?
The two biggest would be misreporting assets. So accidentally putting in the value of your primary home and retirement accounts on the FAFSA is a big one. Don't include those. And then the other one is for divorced and separated families. So when parents are divorced and separated, only one parent needs to fill out the FAFSA on
Oh, okay.
behalf of the dependent student. And regulations recently changed around that. It used to be the parent with whom the child resided with most within the last year, but now it's the parent who provided more than half the student's support within the last year, regardless of who the child lives with and who claims the student on their taxes. So what I see a lot of times with divorced and separated parents, because they filed a joint tax return in that base year, they assume they have to fill out the FAFSA as married, and they're not indicating that they're separated or divorced. When you put that marital status as separated or divorced, even though it's importing the joint tax return, it'll ask you to separate out your income. And so by them not doing that, it's factoring in both incomes. And that's a huge mistake because it can cost students a lot of financial aid. So those are probably two of the biggest. And then the third, I guess, would be not filling out early and missing important deadlines.
Gotcha. So we talked about investments. What documentation should families keep organized? And I do have a question because if you have real estate that isn't your primary home, whether that is a business property or a vacation home or something, do you have to submit an appraisal through the FAFSA? How do you determine what that value of that property is?
So all the investment information you put on the FAFSA is self-reported.
Okay.
And so, however, with that said, college financial aid offices do reserve the right to request any documentation of anything the FAFSA asks for. It's rare that that happens, but I have seen it happen. Most families, what they do is they determine how much they would get if they were to sell that property today using Zillow or just a rough estimate, and then subtracting the debt they owe on it to come up with that net value
Okay.
is really how you go about determining that.
Gotcha. Yeah, I wasn't quite sure if that, appraisals aren't free and wasn't sure
Right.
if, you have to start getting appraisals done of other properties, well in advance because they also aren't fast. So I'm making sure that they're done appropriately. And I know that we help with document organization for our clients when it comes to what they need and when, but anything else that they need, whether it's, bank statements, investment statements, anything else that we may be missing there.
Yeah, pretty much you kind of named it, your investment portfolio and things like, bank accounts. However, one thing to keep in mind, Will, there are some colleges out there that do require the CSS profile, which is a separate supplemental financial aid form in addition to the FAFSA. So a lot of the
Okay.
private, more expensive colleges require the CSS. It's much more in depth.
Okay.
That is a form where the value of your primary home has to be reported, the value of your retirement accounts, your investment value, and you will have to upload like so many months of bank statements for documentation. And
Okay.
you may be more apt to have to provide documentation of other things. So that is a really big difference and kind of caveat between the CSS and the FAFSA. And there are over 300 colleges in the US that do require the CSS profile. So
Okay.
something to be aware of as families and parents are gathering this documentation.
Is that list accessible anywhere, or do you just ask
Yeah,
the
the
school?
College Board puts it out,
Okay.
and you can just Google colleges that require the CSS profile, and you'll come up with a full list.
Okay.
And the other little piece of information with that, if you're divorced or separated, then you still have to provide both parents' information on the CSS. So those colleges that require the CSS financial aid offers might look a lot different than those colleges that require the FAFSA for divorced and separated parents.
It's good to know. So we know that there's two awards or two types of awards. There's merit based and need based. The FAFSA strictly is dictating need based, correct? So if an organization is issuing a scholarship based on need and it's not affiliated with the university, are they going to the FAFSA documentation, or
Yep.
do you take your results and give it to the organization? How does that work?
Most scholarship organizations are gathering information directly from the FAFSA submission.
Okay.
So they're wanting to know if a FAFSA was filed. Some will require, documentation,
Sure.
but the majority are kind of going through the FAFSA submission.
Yeah, this is all, I'm sure, information that folks don't understand that they're about to be overwhelmed with when it comes to
Mm-hmm.
this process.
Yep.
Can you talk a little bit about your process, how you take somebody from start to finish, and
Yeah.
what you walk them through?
So I have like a couple different programs I offer. My signature program and what I'm really known for is my Financial Aid Academy for parents of high school seniors. So it just launched. I have a lot of families that join in September and October as they find me, but it's basically a program that has 3 levels of service that will guide them step by step, month by month through the high school senior year financial aid process. There's access to about 10 hours of digital course content broken down into small bite-sized chunks of information set up in chronological order for them to go through to ensure that they're on track. And then 2 of the levels include membership in a private Facebook group for the year where they can ask me unlimited questions, and I'm in there doing live Q&A sessions. And then my highest level includes a couple hours of Zoom consultation time directly with me. Then for families that are looking, and that's really specific for parents of high school seniors, for families that are looking for something shorter term, or for anybody that's like an independent student, graduate student, or maybe a parent of a dependent student that doesn't want the long program, I do a 30-day financial aid boot camp in October. It's a 4-week program with live weekly webinars, membership in a private Facebook group to kind of give them a kickstart and get them through that process. With a lot of the same information in the academy, we just don't take as deep of a dive. And then lastly, I do individual consultations. I offer anywhere from 20 minutes all the way up to a 2-hour package where families can work with me one-on-one and book those sessions right through my website.
And then that helps take them through award and then appeal.
It basically helps take them through preparing for the FAFSA and CSS, common mistakes to avoid, ensuring they're filling it out correctly, how to, if they're selected for verification, what they need to do for that, how to report special circumstances, how to effectively appeal financial aid offers, what to do after you get the financial aid offers. And then we go over loans, like a lot of good loan options if they
Okay.
have to take loans. So it's pretty much everything.
You said verification. What is that? Does that mean if they're being
So
challenged on their data?
yeah, when you fill out a FAFSA, there's a random selection that's done on about 25 to 30% of students who fill out a FAFSA called verification, or college financial aid offices can choose to verify students if there's a red flag or discrepancy on their FAFSA. If that happens, then they verify the information on their FAFSA. So this is a scenario in which they already have the taxes because they imported them, but there's a special form called a verification worksheet that the student and parents would have to fill out, reiterating the information that they put on their FAFSA. They may have to provide bank account information and other documentation, depending on the college financial aid office. And they won't get their financial aid offer until they complete that verification process.
Wow. So this is an intimidating process that
Yeah, people
thankfully
panic.
you're helping people navigate.
Yeah, people panic, but I always say not to panic. This is just part of the process.
Yeah.
But yeah, people always think they did something wrong or they're going to get in trouble. And the reality is people make mistakes on the FAFSA all the time.
Sure.
So it's just, if something was reported incorrectly, it would just be changed.
Are there any FAFSA changes coming that you know about, or do you have any predictions for the future of the FAFSA process that we should be ready to adapt to?
Yeah, one big change, which I mentioned earlier, is small business owners with under 100 employees that have a family-owned business will no longer have to report the value of their business on this 26, 27 FAFSA going forward, which is
Okay.
great news. That's a really big one. They've simplified the inviting a contributor process for students. They used to have to input all their parents' information. Now they just have to put their parents' email in, and the parents will get an email which will invite them to contribute to the FAFSA. So that will be a lot easier. There's an instant identity verification process happening. So when families, parents, and students create their FSA ID, it used to be like a 3-day waiting period where the government or the Social Security Administration would verify their identity before they could do the FAFSA. That's an immediate verification that's happening now. And then the one thing that I heard, which is really great, is there's AI technology built into the FAFSA called Aiden that they've really upgraded for this year to help families navigating the FAFSA to answer their questions immediately in real time. 24/7 without them having to call the 800 number.
Oh, I
So
see.
this is going to make FAFSA help a lot easier for families this year.
Great. And just like a chat bot or something
Yeah,
that's in the corner that can help answer your
yeah.
questions. Is
hmm
it looking at your data that you've already inputted though?
Yeah, so if you're logged into the FAFSA, it's basically just like ChatGPT would work, and they might come back with more prompting questions
Oh,
if they're
okay.
not really clear and kind of get to the bottom of it.
Wow. So there's a lot to know, a lot to remember, and a lot for us to help folks with. So we have a tradition here on Wealth on the Move, the podcast. And I don't know, are you familiar with the Diary of a CEO podcast?
Yes. Yeah.
Something he does that completely copped from him, but it's a great way for us to tie all of our guests together in some way. And so Dave Peterson was our last guest, and he got to ask a question of you. So his
Uh-huh.
question, and then you're going to get to ask a question of our next guest, and we don't know who that is. This is Dave's question. What advice would you give a young professional who's just starting in their career in terms of making themselves employable for the next 30 or 40 years?
What advice would I give? Find a mentor. I
Okay.
think finding a mentor that somebody that they kind of aspire to be like, or, whether that's in the same business or, you know, there's qualities about that person that they admire, they're successful. Find a mentor, somebody that they can work with directly to ask those questions and kind of follow and see how they do things.
Yeah, it's great insight. I have one in my business. He's been a family friend for a long time and is a great resource for me. Do you have a mentor?
Yeah, I've always had mentors. I've
Okay.
since I've started this business, I've had mentors. Yeah.
Awesome.
Yeah,
That's
for
great
sure.
insight. And I'm actually going to expand on your answer a little bit. Also be a mentor.
Mhm.
It's amazing I turned 47 in 3 days, and um I'm in a unique place in my profession because a lot of my peers really exited the business during the financial crisis. So I have a combination of only being 47, and I'm going to say it that way until I'm 48, and then I'm only going to be 48, but still have 23 years of experience in this profession. So it is amazing how much I learn by being a mentor, by
Mhm.
understanding what is going on with the challenges that younger advisors or younger professionals have that that we may have forgotten or don't understand. And it's a great way to learn about things like AI or ChatGPT or how to start positioning our firm to employ younger advisors. So, in addition to being or having a mentor, I think being a mentor is just as valuable for both you and the mentee.
Oh, 100%. Great point.
All right, your question. What question would you like to ask of our next guest?
So I would like to ask, what advice would you give to a graduating high school senior that has decided college is not for them and they don't want to go that route?
It's great insight. Great insight. I have an answer but I want to hear our next guest answer
Yeah.
first because we have uncovered some really cool stuff using AI when it comes to, again, being 47, trying to learn something new. Our minds aren't always as malleable as they used to be. Um,
100%.
and AI has created a huge opportunity to not only figure out what you don't know, but then being able to create the process to learn what you don't know that doesn't require a college or
Yep.
secondary education institution. So
Yep.
great insight. Tina, where can our folks follow you? We know you're getting hot on TikTok, so we know that that's going to be one of your answers, but where
Yeah.
can our folks find you, follow you, be able to learn more about your firm?
So, TikTok and YouTube, lots of free information posted, Facebook, Instagram, I'm on all the platforms. And then my website outlines all the programs and services I provide and also has a number of free resources, thefafsaguru.com.
Okay.
And I do also offer, just for anybody interested, a free initial 10-minute consult call for anybody I've never worked with before, whether it's just to answer general questions or you want to learn more about the programs and services I provide.
And do not wait. The FAFSA form opens soon, but even if you're not getting ready to fill the FAFSA out this year and have a high school freshman that you think is on the path towards attending college and want to maximize the financial aid offers, make sure you're following and checking her out now. Any last sign-offs before we leave?
Just make sure you get that FAFSA done.
Yes.
It's so hard, especially for high school seniors. They're in the thick of it, applying for admission, and they think, okay, I'm going to apply for admission and then do the FAFSA later. Just make sure you get that FAFSA done in October.
Yep, get it done. All right, that is all for today from Wealth on the Move, the podcast. Thank you so much for tuning in. If you know any seniors in high school or parents with high school age kids that are on this path and confused, please make sure you share this episode with them. There's a ton of information in here that you heard Tina say herself. The amounts of money that you can achieve that you didn't know were available, really could change the financial trajectory for your kids, for your students, for yourself. So make sure you're sharing and following us for more things like this. You can always find me on LinkedIn, just under Will Hoffman. I'm very active there. Check out our website, hoffmanwealth.com. If you want to learn how to work with us, click the book a discovery call in the corner, and we would be glad to talk to you about how to work with us and achieve and work through more things like what Tina has talked to today. But until next time, please remember, keep your wealth moving. Will Hoffman offers investment advice through Private Advisor Group, which is a federally registered investment advisor. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult with the appropriate qualified professional prior to making a decision.
Tina Steele and the FAFSA Guru are not affiliated with Hoffman Wealth Management and Private Advisor Group. This presentation is not intended as specific financial advice for any individual.